Good morning. Got a lot of news today. That's why I'm starting early. very, very busy day. Couldn't be more busy. Please answer the poll. Is ADP going to be higher? Lower? All right. Good morning. 90 seconds, baby, 90 seconds. Ba 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 ba. Thank you for clicking the thumbs up button. Maybe I'll put on the purple Rolex today, huh? For good luck. (8:01). Adjust the time. All right, let's get going. Okay, I'll mark this as the beginning. All right, good morning. Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Because trading is risky, not appropriate for everyone, your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hey, my name is Wayne Pachow. Yeah, we got a big day today. So thank you for being here. If you're new, please take the opportunities to subscribe so you get alerted to my new live streams. Probably not going to happen here at Forex.Today till Monday. But on Friday, I'll be over at the FX Street YouTube channel to trade non-farm payrolls live for, well over 18 years. I think I've been doing that for 18 and a half years, just that one webinar. So that means I have some trading experience. Yeah, so over those 20-something years as a Forex trader, and then later on as a commodities trader, and now as a market investor as well, I've learned a few things. I've made quite a bit of mistakes, but I whittled down everything to just the things that work. So if you want to learn about just the few things that tend to work, I'm happy to share, and that's why I'm here. So you're the boss if you ask questions. And I am the humble servant, so please let me serve you. Ask good questions, and I will provide. On the fundamentals side, I did pass a Series 3 many years ago, and that's the National Futures Association's examination on basically market fundamentals, but in the commodity market. And the reason I did that was it was required if you're a Forex trader. And so when I was learning about how a grain elevator operator would hedge their risk to the grain markets, it kind of spurred my interest in the fundamentals. I'm like, oh, that's really interesting. So anyways, I discovered the fundamentals, fell in love with the fundamental side of trading. I started with technicals, just like you, but I worked my way over to the fundamentals. And then I loved it so much, I spent, enough money that I could have bought a Ferrari. But instead, I bought 5 years at Harvard. And I have now a bachelor's degree in macroeconomics and a master's degree in financial management. Cool. So I learned a few things on the fundamental side. I'm okay. I'm definitely okay. So I can address those things. As far as the other side, I've managed money. I've traded over $1 billion in a month. I've had my own trading desk to clear all my trades. So there's that side of the business too. If you want to know more about managing money, raising money, setting up your corporations and all that kind of stuff, and fund management, all of that could be tackled too. Just ask. Okay. So anyways, there's a lot we can do. Now, today we're going to be news heavy. So we'll probably not get to those deeper questions. Today, I think we're just going to go back to back to the news. So looking at the QuantBox calendar, if I zoom, okay, we have ADP coming up, another dumb prediction. If the number is low, the dollar weakens. Then we have claims, weekly claims, which usually happens on Thursday, but tomorrow is a holiday. That's why there's no webinar tomorrow. Markets are closed. In fact, the markets close early today. They close at the London close. But nonetheless, so we got weekly jobless claims today, and if that number is high, the dollar will weaken. Then we have the stock market open. And then we have ISM services. If this headline number is low, or if the employment subcomponent is low, or if the wages subcomponent is low, then the dollar weakens. Then we have the U.S. stock market close, the European stock market close, or the London, I should say, specifically close. And then we have meeting minutes, which tells us, did the Fed seriously consider cutting in September, or are they really leaning toward 1, not 2? So we're like, dude, you're not going to get a break today. Oh my gosh. So the best thing that can happen here is they all line up just like I told you. Low number, high number, low number. If so, the dollar weakens today. More likely, you're going to get a mixed bag. Some are low, some are high, and we go nowhere. Now, quantitative analysis of the normal data is done by TRADARS, and it looks at the news today, and it goes back years and years and years and years, and looks at what typically happens. Does it get volatility? Yeah, probably. I think a lot of that stuff probably gets vol. And then is there a consistent pattern to the vol depending on greater than expected, lower than expected, or as expected? And it looked at all that stuff and it said, no, there's no reliable pattern. So quantitatively, looking at past performance, it says, yeah, you're going to get a lot of noise today. But what it's not doing is qualitative analysis. It's not thinking that today is uniquely positioned because of its importance to the market sensitivity to future Fed cuts, future expected Fed cuts. And it's not thinking, well, how will this impact a September cut versus a December cut versus no cut at all? Hard landing, soft landing, no landing. Well, that's all qualitative. And the machine's not good at that. And I don't want it to do that. That's my job. So all it's doing is looking at past performance of all of this stuff. And this stuff likely creates volatility, but just not a reliable pattern inside the volatility. That's what chaos theory is. Chaos theory says there's patterns inside the noise. Yeah. And right now it's like, all it's saying is take each one individually and see how it goes. If they all produce the way I told you, then yeah, you might get a good swing out of this. But if it's a mixed bag, these are scalps. Do you see the difference? You might be able to pick up 25 pips on each. So anyways, the first one's ADP. I'll use QuantBox. So QuantBox, when you look at the home page, okay, it's AI-driven data analysis of sentiment, inflation, employment, GDP, technical analysis, open trade positioning, seasonality, okay? Institution versus retail positioning is like all this stuff. But it's also now, because of all the upgrades that I've been adding over the last couple of years, it's also a research tool. So now you can go and say, okay, let's look at the labor market. In particular, like we have job openings, which came out yesterday, and we can see that it was a disappointment. But then we have our claims coming out too, huh? Claims. So this is coming out. On Friday, we have NFP. So we have all this data, right? So the biggest thing, like at the bottom of the hour, so in 19 minutes, we're going to get, we're going to get unemployment claims. And, okay, let me zoom in. I know it's a little difficult to see. All right. All right. So what are we going to get? Okay, a forecast of 236. Okay. Well, this is what we got last week. Okay. So we're going to get the new data here. And then we're going to get a revision. Okay. So we thought 238, but then it was revised or down, right? Revision 239. Okay, so look at week 25. It was forecast to be 235. It came out 238. Okay, higher, which for the Fed is what they're looking for. And then a week later, it was revised to 239. So we went from 235 to 238 to 239. How do you read this? Well, that's happened over 3 months, and that means the trend has been going up, and that could allow the Fed to cut interest rates if they wanted to. And so we want to see, once again, a big number here, and then a new big number when the news comes out at 8:30. Coolio, right? Now, we have a real-time calendar over here on TRADARS. And we'll see the ADP. Remember, a low number weakens the U.S. dollar because that's what the Fed is looking for. You might say, well, is that good? Is it bad? Well, it doesn't matter if it's good or bad. It matters if the Fed is going to cut. Okay, normally you want a big number because it shows the economy is doing good. But right now we want not a big number. So, oops. So let me close the poll. Thank you for participating. I appreciate that. And you guys think higher to as expected. All right, well, we're spinning. Oh, yeah, I wanted to talk about weather later. Oh, Jeez, criminy, what did I do? I'm spinning, oh, I'm spinning. All right, cool. $1.50, huh? Yeah, this calendar's a little slow. So that's what, about as expected, huh? Yeah. Okay, $1.50. Yeah, thank you. And, yeah. Okay, here, Aussie kicking off the hourly 21. Euro kicking off the hourly 5. Right now, it's just regular price action. I don't like the fact that we're in ranges. Kiwi is the dog with fleas right now, so be careful on that one. Pig on the 30. Let's go to the 1H. Okay. And just riding through the range. Okay. Riding through the range. Riders on the storm. Okay, so maybe a new trend. Now notice like some of the analysis here, right? Maybe you didn't predict it. That's not always the point. But at some point you should analyze what is likely happening or possibly happening. And so that's the pattern that's presenting itself. Okay, now you might agree with it, you might not agree with it. Well, that's your job to figure it out. If there are bears, right, then they do live in here. Okay. Okay. That whole area, if they exist. Yeah, I know. We already got that universal code, $1.50. Okay, so now it's sort of the battle here, game on, because now it's one pattern versus another. So all the bulls have already bought. Okay, great. So now it depends what are the bears going to do. Now, if the bears are going to get out of the way, then we're likely to kind of have a pattern that looks like this. Okay. All right. All right. So we got that going for us. We can come back to the dollar pairs if you want. Let's move on to the yens. Okay, yens are reacting risk on, but remember, many of these are very close to targets. Okay. Ooh, I just remembered I probably had a order in the market. Oh, I did. And it's okay. Hang on. I just realized I had an order in there. So anyways, these two yen pairs that we've been looking at for, what, a week now, they're both about 125 pips. Okay, very slow week, but they're doing their job. Let me switch over. I forgot earlier today I had an order. Oh my gosh, I snagged that. Let me move that to break even because I don't like coaching and trading at the same time. Oh my God, like I nailed it. Like, gee, look at that. Oh my God. I got lucky. All right. So, all right, let's go back to what we were doing. So back to the yen pairs. CAD yen doing well, but at target. Now, if we were going to read these charts like tea leaves, you know, what does it say? This chart says, okay, if this is your bottom, okay, then this is your target up here. You can go more. You can. That's what this says. It's not subjective. That's what it says. This is the conservative target, but that's the more likely opportunity. And Denise is right. Like, these yen pairs are very, 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 very toppish. And, by the way, I have predicted out of my guesswork, I have guessed, not analyzed, I have guessed that in the next more than that, in the next 36 hours, approximately 9 a.m. Friday in Japan, in Tokyo time, the Bank of Japan intervenes. So tomorrow, the Bank of Japan intervenes. So be careful on these yens. Recognize, and it's just a total guess. It's nonsense. Okay, cool. All right, here's a trade plan from the other day. How do you like it? It's beautiful. It's beautiful. It's beautiful. It's beautiful, it's true, and I love to trade with you. Yeah, golly, gee whiz, Batman. Kiwi is a dog with fleas, so be careful with that one. It's not going to, right? Come on, your road. Oh, did I just cancel it? No, I didn't. Okay, Euro performing quite well. Okay. Out of position trade, you kick it off the 4-hour 21. That's how you go. Target right now is way up here, $1.75, $1.75.5. Holy schnicker schnocker. Okay. Now, if you want to go to like the past, this is the buy zone. And based on that, okay, this is the number we're on now. But then you roll this over, and now you get to this number. And in an OOP, which this is, okay, so we open above the M3, and we hit this, and don't be shocked if we're all the way back here in July. Maybe even a full Monty if there's intervention. Don't be shocked. Write it down. Because this is what the charts will say. And so if you're not shocked, then at some point you will know when to act. At what point you take profit and reassess. It doesn't matter if it happens. You have to get to this level in your decision-making process. It doesn't matter if it happens. What matters is you recognize the probability, aka risk increase, and you manage the risk before it's a problem, not after. Huh? I know, right? That was awesome. It felt good. Felt good. Yeah, that felt good. Cool. So anyways, nothing but goodness going on in the world here. You can take a different look at this. What do you see? Oh, you can get to about 207, 208. Okay. And she might be done. Another thing I'd like to point out, because many of you are trying to learn from me how to hold your trades longer. Well, about a year and a half ago, this was a buy. Okay, cool. Out of that, the best expected price you could hope for is this price. Yeah. Okay, for the year. Now, if you held on for 6 months, and you're like, there's no way I'm going to hang on for 6 months. Yeah, I know. But notice that it did reset off the 200, does an OOP, and now we're up here, huh? Yeah. But, okay, and that's a big but. Notice what happened. We hit this in summer. QuantBox will tell you there's more downward pressure at that point than upward pressure. Okay? And we're running into that same period here. So is it reasonable to think? This is what we're talking about. Is it reason? Is it reasonable to think we hit here and then do this for 6 months? Even a little bit higher and then but bigger pullbacks. Okay, could we do something like that? What do you guys think? What's your answer? What's your answer? Okay. Well, the major difference is I don't think these drops. See, let me highlight these drops just so you can see them a little bit. We went up and then we came all the way down. We went from annual R2 to annual M4. Then we went a little higher and then almost all the way back to annual M4. Then we went to annual M5 and then almost all the way back. Those are big pullbacks. Was that government intervention? Like this? I don't know. Maybe it was. So what if you had something similar coming up? Well, past performance, which does not predict future results, but you could drop from an annual 210 to an annual 200. That's 1,000 pips, my friend. Okay. And by the way, I've been training the whole year, begging and pleading, hugging and slapping people across the face to not miss these. Even in that intervention of down, the whole time I said, wait for it and buy it. So buying it at 190 and now we're at 205 on this one pair, it's gone up 1,500 pips since I begged you, pleaded for you to buy it. Hey, by the way, you're welcome. Cool. Let's move to our numbers. Okay. We want our claims to be lower. Or I mean higher. 230. Wouldn't it be great to get 240 on some of these things? Yeah. What happened to my TRADARS? What happened to my calendar? Oh, here it is. Remember, there is a scalp on the CAD news. I don't know if I want to cover that in great detail just because it normally produces a pattern, but we have an unusual day, you see? So I'm kind of overriding it. 238. So that's okay. That's an okay headline. Do you have a revision yet? 238 is like, yeah, so that's good. That's a good number. $237.270. So 238 ain't bad. It's pretty good. It's like on trend. We were getting, more like 236. So 238, it's good. It's good. Okay, it's good. The market seems to take it as a miss. What about the revision? Maybe that's what's going on. Uh, 238, continuing 4-week average, 238. So just about average, but that means it's going in the right direction. Yeah, so you can see the direction here is pretty okay, pretty good. If you want the Fed to cut, you want this to rise. This leans toward, unemployment staying, 4.0, 4.1. 233 to 234. Okay, thank you. So also that is pretty reasonably okay. It's not dramatic. Okay, but it's in the right direction. Sorry, I'm just playing around with things. So, anywho, yeah. All right. So overall, it's okay. Okay. Well above 234. So yeah, it's pretty good. I think the market's going to like that. Yeah, okay, so we got the reverse course properly, dollar weakness. So there was some dollar strength there in a little bit. Let's go back. And, oh, wrong one again. Ooh, look at that sell-off. Ooh. Oh, my God. Oh, my God. Look at that. Beautiful little pullback. See, all I did was scalp it off of the moving averages. So when it was down here, I put the order there. Just killed it, huh? So that's risk off the way that Nazi's taking it. Okay, that's the third monster scalp I've caught off of this. So we'll see what it does on these moving averages. Okay, I scalped it here, I scalped it there, here I am scalping it again. So we'll see. I don't know if it's going to last. I just don't know. Like, you would think like these numbers were good enough for a Fed cut. But remember, people want to go on holiday. People want to be done. Do you think a billionaire is trading heavy in July? No. It's yacht time, man. All right, let's zip over to the commodities because, oil has a setup, for example. Let me go to a smaller time frame. If you're going to trade oil, you got a setup right here. Okay. And I'll go to this a little bit. This is old data. I covered this 2 days ago. So, things have updated. But one of the things I talked about is in this part of the world 2 days ago. So I have to update my data. But 2 days ago, there was a high pressure here. Okay. And we have high pressure here from the mountains. It's not a weather system, but there's mountains. And so, and you have oil coming in low. So like 2 years ago, 5 years ago, 10 years ago, 15 years ago, and 20 years ago, I have taught you that when the hurricane comes in low, which is below the islands, the water's warmer, okay? And the hurricanes get bigger. And then they run into these mountains, and then they're going to go into the Gulf. But if there wasn't a high pressure system here, what it would probably do is try to avoid land. It'll try to avoid and it turns, right? But right now, or at least 2 days ago, there was a high pressure system. So therefore the National Hurricane Center forecasts a straight line. And if it does that, it comes in just below the oil. See, the oil industry is in this area. And this would just come in just below it. Now, this is 2 days old. If you do your research, and I'm going to leave this to you, okay? If this moves this way, guess what happens? Okay? Oil. And if that happens because this high pressure moved east, then oil prices go up. What do you think of that? What do you think about that? I will show you. Let's see if this will pull up. Okay. I will show you. This was me probably 20 years ago. Look behind me. I'm tracking weather. Let me show you a similar. So now you go here. Okay? All right? And then you look here. I'm not just making this up. I didn't like attend somebody's webinar and now I'm pawning it off as my own knowledge. Okay? I was doing this 20 years ago, trading oil futures contracts. Yeah. And in this scenario, it's a miss. If it came in a little lower, but not below the islands, but lower over the islands, I might buy frozen concentrated orange juice futures. Because it'll hit Florida, the middle of Florida. Cool, right? Yeah. Do I get a thumbs up for that? Do I get a like? Or is this the same BS all YouTube gurus claim? How many YouTube gurus claim that they were trading weather against futures contracts 20 years ago? Everybody? You're like, Wayne, that's common knowledge. Everybody does that. Well, is that right, eh? So if that was good, please click the thumbs up button. Not for me, for YouTube. Yeah. Cool. That's why I was very grateful when Traders Way added these things. Now, back in the day, like during that picture I showed you, I had to trade futures contracts, right? Now, it's interesting because these things, right, being a CFD, it's interesting because it's not really it's not a futures contract, and there's no underlying oil. You don't actually, like accidentally take delivery of barrels of crude oil on your driveway, if and I don't, so it's interesting where it's a financial asset tied, but not intrinsically tied to the market, but it's not a true futures contract. So it's an interesting development over the years, because when I first started trading, I had to trade, physical oil futures contracts over a futures brokerage, right? You had to have a different, you had a futures brokerage account and you had a Forex brokerage account, and they were separate and they were taxed differently too. So I appreciate these things. Having oil and nat gas, very cool. Metals is enough, It'd be great if you had copper, but not necessarily. Most of us wouldn't trade it anyways. Now, I have it on QuantBox because, for many, it's a sign of economic activity. Because you used to have copper pipes in your house for water. But now you have flex pipe. It's beautiful. Right? Beautiful. And the red is hot and the blue is cold. I just love that. So you don't use copper like that. And many of you probably don't have copper wire in your house for a telephone. RJ11s and RJ, 45s, You don't have a phone line. Your TV is probably coaxial, fiber optic, that kind of stuff. Cool. But anyways, there's your oily trade. So if you are interested in trading the weather, then you might be looking here waiting for an opportunity. Do you buy it now? No. Why do you not buy it now? It's bearish, bro. Okay. But I thought you were a bull. I am a bull. The market's bearish. Okay, quit your guessing and your degenerate gambling and say, well, when does it become bullish? How about a higher high, higher low? How does that smell? Okay. So you sit and you wait. Yep. And you could do it like this. You can change your template. Okay, that ain't bullish. So you sit and you wait. Well, it might be a double bottom. So what? I'm a trend trader. So I will get into the market when I see that happening. I'm grateful that we have a double bottom because that's where something like that typically begins. But it hasn't happened yet. So I wait. I'm not trying to make big money. I'm trying to make low risk money. Right? Yeah. So later today, we have the stock market open. And then later today, we have ISM services. And then later today, we have the London and New York close because it's a half day today. Then we have FOMC meeting minutes. And then tomorrow, the markets are closed in the United States. So if you're non-Americano, what that means is you should probably not trade tomorrow. The Brits are out voting. Right? Americans are getting drunk on light beer and blowing shit up with fireworks. Okay? It's their God-given right. So they're not watching the markets. So you're going to have like low volume, low volatility. You need to be very, very, very careful. Even if you're in Timbuktu and you're like, what does that have to do with me? There's no volume and volatility. And then on top of that, you face risk that tomorrow night, the Central Bank of Japan intervenes into the yens. Oh my God. Then on Friday, we are meeting at the FX Street YouTube channel to trade non-farm payrolls live. But I still think many of market participants are going to take the day off. So you get half of Wednesday off, all of Thursday off, all of Friday off, all of Saturday off, all of Sunday off. Okay? And then we enter the second half of the year. Okay? We're itching closer and closer to earnings season. And that's where the risk off may begin. Not bearishness, but risk off. What I called the fizzle. fizzle out. Could start basically Monday, depending on how things go later today and then on Friday. Okay. Also, I think next week on Tuesday, we have the beginning of the annual testimony from the Fed, right? So Powell speaks to the Senate and to Congress. And that could be a market mover, right? So interesting life that you are leading. And that is a blessing. I don't think any of you are bored with your Forex trading. And that, trust me, is good. As a trader, having done this for decades, there have been periods where nothing happened for 6 months. And this is a blessing that we have ongoing interest in the markets. Yeah. So thank you for being in my life. Thank you for being part of this community. I invite you to join investorbootcamp.com. I invite you to join quantbox.com. I invite you to join TRADARS.com. You're like, man, that's a lot of stuff, Wayne. Well, by the end of summer, there's a high probability it'll be one service. It'll be training, coaching, fundamentals, and technicals all in one place. And you'll be able to trade like a professional institutional trader like I've been trying to train you to be. Not silly amateur hour get rich quick BS you see all over YouTube, but I want you to trade like a sustainable small business. It's going to be great. Okay, it's going to be fantastic. So stick with me, stay close, and you'll survive and then thrive. Peace on earth. May the pips be with you. May your profits be above average. Have a wonderful trading day. And I'll see you on Friday. Yeah? Non-farm payrolls, FX Street. Cheers.